quarter. Has it been backed by the higher volumes and price realizations? I think that's what the street will want to know, Mr. Gogri, because how much more of price hikes, if any, should be factored in?
Yeah, first of all, I would like to mention that this is the first time the result which has come is only of a chemical segment. Up till now, till last quarter, it was combined for chemical and pharma. And YoY, the 34% increase in revenue. Because there are a lot of raw material increases from YoY basis. Benzene was about 77, this quarter it was 92. And toluene went from 63 to 111. And another point is the last year we had a shortfall fee of about 53 crores coming in as an income for because of the contract cancellation. So if you're netting off, then EBITDA is increased by about 30%. If you take off the shortfall fee, and the PAT was impacted also because of the increase in interest cost. Interest cost increased about 20 crore because of the forex depreciation impact. Out of this 43 crore, 20 crores approx is coming from forex impact. So that is the reason of additional impact on PAT.
There is a demerger which is taking place, right, of the pharmaceutical business. The first time where you're seeing the results ex that, primarily the chemicals business. Can we now just speak a little bit about the near-term outlook for the chemical business? Because there's shortage of nitric acid. There's rise in fixed overhead costs as well as you increase capacity too. Give us a short-term outlook.
Yeah, first half our EBITDA for chemical is about 550 crores. And overall, we see the annual EBITDA to be around 1100 crores. In general, in market, dyes and pigment segments are slower. So we are continuously trying to adjust our product mix and geography. Nitric acid situation is reasonable right now. We don't see much impact of nitric acid in second half of this year.
Specifically, Mr. Gogri, on nitric acid, which in a sense is the most important moving part for you. How are you planning to address the nitric acid shortage issue?
Basically, nitric acid, we have already announced that we are putting up a concentration plant, but it will be commissioning in FY24 Q4. Currently, because of the overall slowdown, we don't see much issue with the nitric availability. And second half, some additional capacity is expected in nitric acid in India. So we don't see much nitric acid issue in FY24.
In what are the categories you currently are dependent on China for raw material supply, and because of a lockdown there, that supply is not there. As a result, you have to change your supply chain, or you will have to reorient your chemistry, or you cannot sell that product.
Yeah, we are in a very unique position in chemical industry that we are totally independent of China. In our chemical business, we don't import anything from China. And that is the reason actually we are getting a lot of demand pull for our value-added products, and we have increased our R&D. Because we started with benzene, chlorine, nitric, ammonia, which are all available within India, or product like aniline or toluene, which can be easily imported from various countries. So we are totally independent of China for our raw material. Actually, our exports to China has been impacted because of this COVID partly.
And if China opens up, which is what we are getting a sense, do you see the Chinese export market opening up for you also? If that happens, then could the last quarter be significantly different? Could next year be significantly different?
No, basically, then it will allow us additional geography to put our product depending on the pricing situation. But it is not going to be a very big significant impact either on the plus or minus side, but it opens up an additional geography for some of the products.
What about the latest on the recent demerger of the pharma business? How are you looking to unlock value for shareholders here?
Yeah, that entire process is complete, and I think our share is also now ex demerged situation, and the pharma is expected to get listed in December. And pharma in the first quarter, if you just reduce the numbers from what we have highlighted, the EBITDA of pharma was about 88 crores, and PAT for pharma in the first quarter was 54 crores.
Give us a sense as to what the outlook is when it comes to your capex initiatives as well, which are linked to the third long-term contract. Because are they on track? Because when it comes to capacity expansion, what is the commissioning schedule, and what is the kind of volume ramp up and operating leverage that you're seeing from this expansion?
Yeah, the third long-term contract we should be commissioning in Q3 this year, and progressively it will get ramped up in FY24 onwards. Whereas the second contract, is running at a good capacity.
Mr. Gogri, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you.